Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about Meta platforms. And as we can see right here, this stock is up 81% over the last 12 months. And we can see that year to date, the stock is up 64%, while the rest of the market is up 34% over the last 12 months. And year to date, it looks like they're up about 23%. So obviously Meta is outperforming the market right now. And we all remember that big crash that Meta had back in 2022 when their stock hit 5-year lows of around $90 per share. But since then, they're up 550%. So if you're one of the people who invested in Meta at that time, then you've obviously made a killing. I was one of those people, but unfortunately, I didn't put as much money into it as I would have liked to in hindsight, mainly because this volatility at the time really threw me off. I wasn't sure what was going to happen with the stock, so I didn't put as much money in that. So I missed out on that opportunity. But if you didn't, then congratulations. But I just wanted to do an analysis of Meta to look at their recent earnings results for the past 2 quarters, since especially their Q3 results are coming up right now. And I also wanted to figure out the intrinsic value per share for this company so we could know if the current price of Meta still presents a good buying opportunity and if they'll be able to continue this growth into the future. So for starters, obviously Meta's stock price, as I said, has increased 70% year to date, beating market's 20% return, up 550% from all-time lows. The Federal Reserve's monetary policy will likely have a big impact on the future trajectory of all tech stocks. Historically, tech stocks do better when interest rates are lower because borrowing money becomes cheaper and more companies spend money on advertising using Facebook, Google, and other advertising platforms. However, if the Federal Reserve ends up increasing interest rates to manage inflation, it could damage or dampen growth in tech stocks like Meta, and upcoming election results might also end up driving some short-term volatility in the market as well. Right now, Meta is making some heavy investments in artificial intelligence and the metaverse, and that could end up leading to rising costs that eat into profitability in the short term. But the continuing scale of Meta's infrastructure might end up paying dividends in the future. Meta also recently announced or introduced its Meta Quest 3S, which is their most affordable mixed reality headset aimed at expanding accessibility to VR experiences. They also revealed the Orion AR glasses, which are considered their most advanced augmented reality device to date. So if you're a long-term investor willing to hold Meta through potential volatility, Meta could end up being a good buy for you right now. But you should also carefully consider the risks involved with Meta's investments, the competitiveness of the tech sector as a whole, and also the broader risks of the current economy due to inflation and uncertainty surrounding interest rates. So right here, I have an article about Meta platforms that touches on their Q3 rosy outlook, as you can see right here. In the second quarter, they reported earnings of about $5.16 per share, which beat Wall Street's projection of about $4 per share. They also generated about $39 billion in revenue, surpassing the expected $38 billion. They provided an optimistic forecast for the third quarter, projecting revenue up to $41 billion, which is above the $39 billion target set by analysts. And the CEO, Zuckerberg, stated in their earnings call that they had a strong second quarter, and Meta AI is on track to be the most used AI assistant in the world by the end of the year. Also, they've released the first frontier level open source AI model. They continue to see good traction with their Ray-Ban Meta AI glasses, and they are driving good growth across all of their apps. Advertising remains their main revenue source, making up 98% of total earnings. Advertising revenue came primarily from Facebook and Instagram apps, and it rose 21% in Q2 compared to the previous year. Lastly, their sales continue to impress investors. UBS raised the Meta platform's price target to $690 per share, up from $635 per share on October 7th, keeping a buy rating, and ad budgets accelerated in August into September. $690 is obviously a big improvement from where they are right now at about $577 per share. And obviously, like I said before, if the Federal Reserve ends up lowering interest rates, then that could also contribute to the stock price increasing and also ad budgets accelerating even more so in the future. Okay, so right here we have their financial statements for Q1 and Q2 of 2024. For their Q1 results, we can see revenue was $36 billion, up from $28 billion year over year, which is an increase of about 27% year over year. And then we can also see that for net income, they had earnings of $12.3 billion, up from $5.7 billion. That's an increase of about 117% year over year. Then for Q2, we can see they had revenue of $39 billion, which was up about 22% year over year. And then for net income, they had earnings of about $13.4 billion, which was up about 73% from $8 billion year over year. So pretty massive increases so far for Meta's revenue and earnings. That's obviously been one of the main contributors to this increase in their stock price over the last 12 months. And if they're able to continue this revenue and earnings growth in the future as a result of, interest rates from the Federal Reserve or other macroeconomic trends, then this could end up increasing even more, and that could end up producing more shareholder returns. Lastly, I wanted to use this intrinsic value table to try to estimate Meta's intrinsic value. I'm using a growth rate of about 15%, which I got from their historic growth rate calculation, calculating the growth rate of their free cash flows over the last 5 years. Their free cash flows in 2019 were $21 billion, and in 2023, they were $43 billion. So over 5 years, that's an increase of about 15% year over year or year to year. And then we can also see that for the weighted average cost of capital to calculate the discount rate for this DCF model, I got that using this calculator right here. You can pause the video and look at the metrics if you'd like to. And then for net cash minus net debt on their balance sheet, they currently have a net cash position of about $20 billion. And for shares outstanding, they have about 2 billion shares outstanding. So intrinsic value per share right now is estimated to be about $450 per share, which basically puts their current share price at a bit of an overvaluation at $578 per share. But obviously, these are using free cash flow estimates from 2019 to 2023. So if they end up posting higher free cash flow in 2024, which they probably will, then a lot of other assumptions in this DCF model might change. So they could be presenting a good buying opportunity depending on the metrics that you're using. But as of right now, it looks like they might be a little bit overvalued. Then to do a competitor industry analysis, I compared Meta to Google and Amazon, other tech companies that they're competing with. For financial ratios, we can see Meta is dominating across the board. They have the highest gross profit margin, the highest net profit margin, highest return on equity. They also have the second highest PE ratio and the highest price to cash flow ratio. And they also obviously pay a dividend now, a dividend yield of about 0.26. So for every $100 you invest into Meta, you're getting paid a dividend of about 26 cents per year, which obviously isn't that good, but considering Meta is a tech stock and it grows very fast, the fact that they're really paying a dividend at all is still very impressive. So from a financial ratio perspective, it looks like Meta is definitely dominating Google and Amazon. Then lastly, I wanted to compare Meta to other companies that we've looked at on this YouTube channel so far. In terms of intrinsic value, we saw that Meta wasn't trading below their intrinsic value per share. So you can see the companies here that were. Google, one of their main competitors, has consistently been trading below intrinsic value for pretty much every video I've ever made about Google on this channel, mainly because their free cash flow is so strong. Then for growth rate, Meta had a growth rate of about, I believe, 13%. Yeah, or 15%. So that's not good enough to get them onto the growth rate table, but you can see the companies here that had the highest growth rate. For dividend yield, we can see the companies that paid the highest dividend yield, a lot of oil companies, as we can see right here. And then for profitability, Meta comes in second place for gross profit margin, 80% behind Adobe's 86%. And for net profit margin, they come in at 28%, fifth place. NVIDIA had the highest at almost 50%. For year over year revenue and earnings growth, we can see right here that Meta shows up on almost all of the tables here. For Q2, they're near the top of the list so far, 22% Q2 revenue growth and 73% Q2 earnings growth. For Q1, they had 27% revenue growth and 117% earnings growth. For Q4 of 2023, they also made it to the table, coming in fourth place and fifth place, 200% earnings growth in Q4 of 2023. Q3, they had earnings growth of 164%. And then Q2, they didn't make it on the table because I believe Q2 was, that was still the time where they were starting their recovery. So we can see that consistently over the last 4 quarters here, Meta has been doing very well compared to pretty much every other company in the stock market, regardless of whatever industry they were competing in. So very impressive by Meta. Then lastly, I wanted to compare Meta to other companies based on stock performance. We can see that over the last 5 years, Meta is up 213%. That isn't good enough to get them onto our top 10 list here. We can see GE over the last 5 years had a return of 241%. So they take the 10th place spot, and then first place is Nvidia with over 3,000%. So that's about all I wanted to say for Meta. Let me know in the comment section down below what you guys think of this stock. Do you think it's still a good buy at the current share price, or are you going to wait for the stock to come down a little bit before you try to invest in it? Obviously, I still hold onto a couple of shares that I purchased at around their 5-year lows, but I didn't invest that much, so I missed out on that opportunity. Let me know in the comment section down below if you guys are able to capitalize on that opportunity. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.